Ah, gold. The shiny, precious metal that has been cherished by humanity since the dawn of civilization. From ancient Egyptian tombs to modern wedding rings, gold has always symbolized wealth, power, and love. You can't deny it. Humans have an obsession with gold. We've fought wars over it, sung songs about it, and even panned for it in rivers, hoping to strike it rich. It's no wonder they call it the gold standard when it comes to value. But here's the twist. One of the greatest investors of all time, Warren Buffett, has a very different view on gold. In fact, he's made it crystal clear over the years that he has no interest in this shiny metal. So why does Warren Buffett, the Oracle of Omaha, turn up his nose at what many consider the ultimate symbol of wealth? Let's start with a little history lesson. Gold has always been seen as a safe haven asset. When things go south, like, say, during a global pandemic or a financial meltdown, investors flock to gold faster than your uncle at an all-you-can-eat buffet. It's like that one friend you always go to for advice because they never seem to change. But according to Warren Buffett, investing in gold is like hoarding a bunch of yellow rocks. His philosophy is all about investing in things that grow and generate cash flow. And to him, gold just doesn't cut it. Quote, "Gold gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head." Yeah, that's right. Warren Buffett thinks Martians would find our obsession with gold ridiculous. And when you think about it, he's not wrong. We dig it up from the ground, only to lock it away in vaults. There's no innovation, no growth, no dividend checks coming in the mail, just a shiny piece of metal sitting in the dark. You see, Buffett's entire investment philosophy revolves around one thing: cash flow. He's all about those businesses that churn out profits like a well-oiled machine. If you can't squeeze cash flow out of it, Warren's not interested. That's why he's a huge fan of companies like Coca-Cola, Apple, and American Express. They produce products and services that people love, generating cash flow and profits year after year. Gold, on the other hand? It's just there. Buffett would rather put his money into something that works for him, like that friend who always shows up with pizza and a good investment tip. Gold is more like that friend who sits on your couch eating your snacks and doesn't contribute to the rent. Sure, it's nice to have around, but it's not paying the bills. Buffett often draws a comparison between gold and productive assets. Imagine you had a choice between owning a big pile of gold or owning a business like Apple. The gold just sits there looking pretty, while Apple is busy making iPhones, signing deals, and raking in billions of dollars. Buffett's not interested in being a glorified security guard for a shiny metal. He wants in on the action. Here's a fun little thought experiment Buffett once proposed. Imagine it's the year 1800, and you have two investment choices: a single ounce of gold or 100 shares of a company like Coca-Cola. Even though it wasn't around yet, you get the idea. Fast forward to today, and that ounce of gold would be worth, well, an ounce of gold. Maybe a little more, thanks to inflation and demand. But those 100 shares, they would have split, grown, and multiplied into a small fortune, producing dividends along the way. As Buffett put it, for every dollar you could have put into gold, you would have earned far more by investing it in stocks. Gold is just a shiny object that people think is safe, but it's not actually a productive asset. If you had invested $10,000 in the S&P 500 back in 1942, it would be worth over $50 million today. If you put that same $10,000 into gold, you'd have around $500,000. Not too shabby, but nowhere near the jaw-dropping returns of the stock market. Let's be honest. People don't buy gold because they're optimistic about the future. They buy gold because they're afraid. Afraid of inflation, afraid of economic collapse, afraid that their life savings could turn into monopoly money overnight. Gold is the ultimate fear-based investment, the go-to safety blanket for investors when the world seems to be falling apart. It's like a financial security blanket for adults who are convinced that the zombie apocalypse is right around the corner. Think about it. Gold doesn't produce any income, doesn't pay dividends, and doesn't innovate. But it does one thing exceptionally well. It sits there, looking shiny and reliable, especially when the headlines are screaming doom and gloom. In times of crisis, people turn to gold like it's the financial equivalent of comfort food, something they can count on when everything else feels uncertain. Remember those early pandemic days when everyone was stockpiling toilet paper? That's kind of what buying gold feels like, hoarding something that doesn't change your financial reality, but it just makes you feel better. Let's talk about opportunity cost, a fancy term that basically means what else could you have done with your money? Buffett's all about maximizing returns, and in his mind, gold is a dead-end street. Sure, it might go up in value when the world is falling apart, but over the long haul, it's been a pretty mediocre investment. Consider this, between 1980 and 2023, gold's annualized return was around 2.7%. The S&P 500? Closer to 11%. That's a huge difference, folks. If you're saving for retirement, those extra percentage points can mean the difference between sipping piña coladas on a beach or working a part-time job in your 70s. Buffett has often quipped that if you melted all the gold in the world, it would form a cube about 70 feet on each side. That's all the gold that's ever been mined in human history. So where does Buffett put his money instead? In businesses that have a moat, a competitive advantage that keeps competitors at bay. Whether it's a beloved brand like Coca-Cola or a tech giant like Apple, Buffett's looking for companies that dominate their industries and have the potential for long-term growth. It all comes down to this. Buffett invests in things that make money, grow, and pay dividends. Gold, for all its glitter, just doesn't fit that bill. As he once said, "I'd rather have all of America's farmland than all the gold in the world." Because let's face it, people are always going to need food, but they don't actually need gold. It's not feeding families, powering homes, or inventing the next big thing. Here's the million-dollar question. Should you invest in gold? If you're looking to protect yourself against a zombie apocalypse or plan on auditioning for the next season of Gold Rush, then sure, why not? But if you're thinking long-term, Buffett's advice is clear. Invest in businesses, not bars of shiny metal. If you want to build real wealth, focus on assets that grow, innovate, and generate income. Gold might be a good hedge during uncertain times, but it's not going to give you the kind of returns that stocks, real estate, or even well-chosen startups can provide. And remember, in Buffett's world, it's not about following the crowd. It's about making smart, strategic investments that stand the test of time. Gold might be nice to look at, but it's not going to pay for your kids' college tuition or your dream vacation. So maybe, just maybe, it's time to take a page out of Buffett's book and put your money where it can actually grow.